Hi, good morning. Good morning. Welcome to the Kyle Sells Biz Off the Record podcast. My name is Kyle Griffith. I'm the managing partner of the NYBB Group and CEO of the Eminae network. I'm really excited to have this LinkedIn Live session. We are currently streaming live on Facebook, Twitter, LinkedIn, and YouTube. And in the past, we have held our events via LinkedIn audio. So now with the live, you get a chance to see what we look like and interact as well. You should have an option to ask any questions throughout the broadcast. So today I'm very excited. It's been a pleasure of mine to meet Mr. Gordon Coyle. He is the owner of the Coyle Group, which is a 94-year-old brokerage firm that started by his grandfather. So I'm really intrigued to learn, because when I meet new people, I want to learn Gordon's not new. We have met before, and I've been on his podcast previously, but I like to learn about folks' background and why they got involved, doing what you're doing, learning about the experience working with clients, especially in this particular space in the business insurance sector, learn more about Gordon and his expertise. So Gordon, why don't you introduce yourself? And first of all, thank you for being my first guest back in our live in-person video LinkedIn podcast, and welcome to the show.
Thanks, Kyle. Well, thank you for having me. It's great to do these. I've only done a couple of live shows, so it's very unscripted, and I'm excited to do it. You know, in my world, we do a lot of video, and it's heavily edited. I'll be honest about that. So having a live event is kind of interesting. So my background, I've been in the insurance business for 41 years. I got out of college. My dad was a principal of the firm that I'm in now, and that was 1982, way back. And he said the economy was terrible. And he said, before I graduated, actually, you know, if you ever want to come into the business, it's here for you. But I don't want you to feel compelled. And I had worked during the summers, you know, as a kid in the office and getting, you know, a feel for it. Keep in mind that this is way before any automation. So everything was done on paper and typewriters, believe it or not.
Yeah.
And so I graduated from college, and I was like, I'd like to give it a try. It was also very difficult to get a job in 1982, 1983. The economy was very, very poor. A lot of my buddies that were graduating at that point were struggling to get good jobs. So I said, why not give it a try? So I did. I enjoyed it, stuck with it. My dad retired early on. I was probably only 27 when he retired, 26 or 27 years old. And we had just started to automate the company. Computers, PCs were just coming out. And, you know, it's kind of hard to believe that they had less computing power than even a flip phone probably from 15 years ago. So interesting transition from a very manual, old-fashioned process to, you know, what we're doing today, which is digitally, exclusively digital in our business. And over the years, we've bought and sold agencies. I've had business partners. I've gotten rid of business partners, and had different experiences along the way. And today, even 41 years later, I love what I do. I love coming to work every day, because I get to work with business owners, entrepreneurs, large and small. So we work with a wide range of companies that are startups, you know, well-funded startups in the tech space or the biotech space, all the way up to very large middle market companies that have very complex issues to deal with. And I just love working with these folks, helping them understand what their risks are and how to mitigate those risks, either through insurance or through risk control, risk mitigation, you know, techniques and strategies. So that's what I do. And over the years, the other thing I want to make clear was that, you know, we went from a very traditional Main Street type agency that did home and auto and business insurance and life insurance. And over the years, I sold off books of business and other agencies that we co-owned to just focus on business insurance. So we've been solely a business insurance agency for probably 13 or 14 years. And that singular focus has really helped us grow significantly, because business owners know that what we do is complex and difficult, and it's the only thing we do. So we've become very adept and expert at those things.
I'm listening to you, and thanks for sharing that, Gwen. I'm listening to your story about how you were 27. And how old was your father when he retired?
He was 52.
So what was that dynamic like after he retired? Was he giving you some oversight? Was he?
No, he was gone.
he was out of it.
So about a year before he retired, he had a heart attack. And, in the 80s, when you had a heart attack, your doctor said, why don't you take off a few months and recuperate? As opposed to today, you have a heart attack and in 3 weeks, you're on a treadmill,
Right.
rebuilding your strength. Right. And my folks had owned a vacation house at the Jersey Shore and another place down in Florida. And my dad came back like after 4 months and he's like, I really enjoy not working. And he started dropping hints about it. And then he was like, I'm done. And when he was done, he was done. In fact, I remember, and I've told this story many times, that my grandmother came to me one day, and we're just, we were visiting, and she goes, I have to tell you something, that you're very lucky the way your father retired. I said, how do you, what do you mean by that? And she said, when your grandfather retired, there was a big dinner, and, big transition. And the next morning, I'm making breakfast in the kitchen, and your grandfather comes downstairs and he's got, a white shirt and a suit on. And I said to him, Harry, where are you going? And he says, I'm going to the office. And she said, you retired. Well, what am I going to do? And he's like, I'm just going to go see what's going on. And my grandmother was like, what do you mean you're going to see what's going on? And this continued and continued and continued. And my dad really never made a fuss about it. But the moral to the story was that I was very lucky that my dad made the decision to transition out of the business and he retired. If I had a question or something, he would always be there for me, but he didn't hang around and want to go to lunch every day or whatever. So I did feel very lucky. And I have a lot of friends in the business that grew up with their dads and in the business, and it wasn't, they had to wait until they were in their 50s until their folks retired. And then it was a difficult transition. So I do consider myself very lucky that my dad retired, and the way he retired, kind of handed it over to me, and I was ready to go.
That's pretty amazing. And I always have to give kudos to business owners that are in, second and third generation companies. There's not too many of that, just to have that succession, and you're passionate about it. Your father was, as your father was. My father retired early as well. He was 50 when he retired.
Okay.
I was pissed off when he was retired because we had some business plans we were planning on as a family. And but it was a life-changing experience for me, and he's able to take time off to mentor me and be around for me for all of my growth. So sometimes I kind of look back at it now, what I'm doing now. A lot of owners are just caught up in their business and not really. You got a kind of mistaken identity. You mentioned about your grandfather coming to work. Well, he's out of work, but he's actually still in that mindset that, hey, I got work to do. And sometimes they kind of lose their identity. So it's always good to have, when I speak to my clients, have like some plans, either philanthropy or charities or something you want to focus on, or just supporting your grandkids and or your kids and their business endeavors. So that's a very powerful story. I was going to ask you, what do you find most rewarding about what you do? But I kind of get the impression that just kind of keeping that legacy going and then supporting your business owner clients. Is there something else that that makes your business more rewarding, providing business insurance?
I think it's outside of insurance. I think we've talked about it, is the digital marketing experience and journey that I've been on for the last several years of creating content, specifically video content. And a friend of mine that's in the insurance business that's much younger than me, he said, you got to do this. And I was like, but I don't know what I'm doing. He goes, nobody knows what they're doing. You just get into it and you do it. And I took his advice, and 2 years later, almost 3 years later, we're seeing tremendous opportunities from the digital content that we've created. I mentioned before we got on the call, before we went live, that In my inbox this morning were 2 opportunities that were results of people responding to our content saying, I need help with my business insurance. So, it's every person's dream, whether they're in the insurance business or business development in another industry, to have your inbox be the source of your new business without having to make a lot of cold calls or going out and trying to drum up business. Business is coming to me on a very regular basis every day. So that's exciting, and I really enjoy it.
Yeah, it's funny you mentioned that. We were talking about that. I do talk to my new advisors that, you want to be more or less working on your business than in your business, and you want to block out time for either business development or business strategy or growth plans and so on. And sometimes when you have your clients controlling your schedule, then you're losing opportunities to continue to grow your business. So always blocking out that time. So this is actually some time that I've blocked out for me to get to know folks like yourself and others. And we're going to be having this session every week on Wednesdays. So let's get into the importance of business insurance, and maybe you can share with us, like, typically what type of clients you work with and what are the most common business insurance needs.
So as I mentioned earlier, small to large clients, every business needs the core general liability, property insurance, workers' compensation, today cyber insurance if they've got automobiles, business auto insurance. And then there's a wide range of other products that are out there. There's 2 areas that we have deep expertise on, which is D&O insurance, which is directors and officers liability insurance, and E&O insurance, errors and omissions insurance. So any kind of a professional, anybody that's giving somebody advice or guidance or selling their expertise needs E&O insurance. D&O insurance, a lot of people think, well, I only need that if I'm a public company or if I've got a board of directors. But within D&O insurance are subcategories of coverage like employment practice liability insurance, fiduciary insurance, and then you can get like crazy with crime insurance, kidnap, ransom, extortion insurance, and the list goes on and on and on. And I think what I've done is built these expertises around these really unique coverage forms that a lot of other brokers don't have. So if we're working with a hedge fund, a private equity firm, a technology firm that's funded, they have really unique issues, especially around D&O and E&O insurance, and then cyber. So that's where we've built our expertise to kind of differentiate ourselves from the run-of-the-mill agent that does, just the general business. Everybody can do general business. Some people do it better than others. But when you get into these unique coverage forms, you need to have really good knowledge, expertise, and skill to craft these policies because they are all different. They need to be highly customized and tailored to a client's needs. So I hope I answered that question.
Yeah, you got it 100%. And how do you help them identify what's the right insurance coverage for their business?
Some of that is based on just the type of business it is and our prior history of working with other clients in that vertical. So like I mentioned, a hedge fund, I know that a hedge fund needs A, B, C, and D. They may not need it all today, but the lead product is a investment manager's portfolio, which is directors and officers and errors and omissions insurance. And then to that, we'll add cyber and a business owner's policy and crime insurance and whatever that client's exposures may be, as well as their budget. We're very sensitive that, whether it's a startup or a very established company, they take their insurance budget very seriously. And I don't want to go in there and say, oh, you need all this stuff. I'll make recommendations and I'll try to demonstrate the recommendations of why I think they need it. But I'm not going to push it down their throats because, buyers are just resistive to that sort of strategy or selling skill. So I'm much more consultative, easygoing, and just say, this is why I think you need this. And this is what it's kind of the range of what the cost is going to be. So it's kind of delivering that level of expertise as well as not being really pushy about it and explaining why I think they need it and being sensitive to their budget. So look, if it doesn't fit this year, then let's talk about it next year. We'll put it on the schedule for 6 months from now. If things are going well, then we can broaden this protection. That's how we do it.
Awesome. Can you share maybe a success story where proper business insurance made an impact on one of your clients?
Well, on every client.
That's a good answer. I like that. Right.
Well, I'll tell you what, you know where the rubber meets the road is when a client has a claim.
Right.
And, I'm thinking of a client right now that had a cyber event. They had a wire transfer fraud, and they did not want to buy cyber insurance. And every renewal that came up, no, I'm really not that big. I really don't need it. We've got great security. I don't really think cyber is something we need. Now, keep in mind, if I remember correctly, maybe the premium on this policy was $4,000 or $5,000.
Mm-hmm.
And, we persisted every year on the renewal review. And they finally said, yeah, okay, it's not that big. It represents, a couple of points of our total insurance spend. Why not? And then later that year, they had a wire transfer fraud and they lost $80,000 and the policy paid for it. And that's where the rubber meets the road. And it's just being able to communicate the points of differentiation, why you need things and why I think you need them, like I talked earlier. That made the difference for that client. And they were really grateful that they had made that decision. And they were grateful that we continued to kind of push them in the right direction.
Mm-hmm. Interesting. Now, Gwen, as you know, most of the folks that follow me and follow my content, especially here on LinkedIn, are involved in some aspect of mergers and acquisitions. Have a lot of attorneys and CPAs and advisors and clients and business owners that are involved in either acquiring a company or selling a company or merger of a business. Maybe can you talk a little bit about the importance of business insurance change? How does that change when a business owner is considering a merger, acquisition, or retirement?
Sure. So there's two pieces that I think we want to talk about. The first one is both the buyer and the seller have to understand what the risks are and what the insured risks are and are not, and how they're going to coordinate after the transaction date. So policies like directors and officers, errors and omissions, cyber, employment practice liability insurance, they all have something called a change in control provision embedded in their policies. And this is not understood by a lot of business owners and not by a lot of insurance brokers. So at the date of the transaction, that provision in the policy says the policy terminates as of that date. And then they have a certain number of days to execute what's known as a tail policy or a tail or an extended reporting period. Those policies that I mentioned are claims made policy forms. And we could go on for hours about what that means, and I won't bore you. But the whole point of the conversation is understanding that well before that transaction date, so that if the seller isn't prepared to execute the tail, that they know they have to. Mm-hmm. For the buyer, they want to guarantee that the seller is executing a tail so they don't have carry forward liability. So all of these issues need to be coordinated. Then you've got just your basic property, liability, workers' comp, all those issues to contend with, and how those liabilities are going to be allocated, who the costs are going to, flow to, what's been paid, what's not been paid, as well as how are you going to write new coverage? Is the buyer going to assume all these policies into their current insurance program? Or are they going to write new policies? Most policies cannot just be assumed or do a name change. When there's a change, you have to normally change the policy as well. So a lot of those things need to be coordinated. And part of our practice is we do a diligence review. If we're hired just for that purpose, for an outside client to do a diligence review, we charge for it. If it's for a current client that's acquiring a firm, we'll do it gratis. But that diligence review will give, in very simple terms, hopefully on 1 or 2 pages, these are the insurance and risk issues you have to be worried about. Mm-hmm. And then depending on if it's for the buyer or the seller, typically it's for the buyer, so they have eyes open when they go into a deal. So the second thing that I want to talk about is M&A insurance. So a lot of companies don't know that mergers and acquisitions has the ability to insure a deal, commonly known as reps and warranties insurance. And you and I have talked about this, and we have a product that's available for the lower end of the middle market, where the deal size is $15 million and lower. Before this product came out, probably 2 years ago, there was no such reps and warranty coverage available in the small business market. Private equity and a lot of deal makers were using what is known as R&W insurance for years, but that product in the larger market is very heavily underwritten, very heavily priced, but it's still deployed. In the large market, typically an underwriting review is going to cost the client $30,000, whether they buy the policy or not. Then the premium is going to be heavy, and it's going to be very tailored. The small business product that we have, that I'm really charged up about, I think it's a phenomenal thing for sellers to really hedge their risk and to decrease collateral requirements at closing, is inexpensive. There's no upfront underwriting costs, and I can get a quote on it in like 2 days. Whereas in the large market, it could take 20 days to get a quote.
Yeah, I'm glad you mentioned reps and warranty insurance because in this day and age, there's a lot of uncertainty. A lot of businesses is facing. Well, first thing about it, the cost of capital is going up, right? So that factors into the potential valuation of the purchase of the business, where buyers are trying to devalue the business because their costs to get the capital is going up. And then one of the biggest challenges we have now is the workforce management and retention of employees. So there's a risk that employees may either leave, go to another company, or start their own business, and so on. And then all the operational issue and the business potentially not represented as it should, because there's always nuance or potential claims that can come about. And this reps and warranties insurance can bridge the gap, so to speak, to kind of get both parties to the closing table and shorten that closing cycle. So yeah, that's a great product. And to your point, it is typically used with larger deals. It's been inexpensive it's been pretty expensive for smaller transactions. So having that product, you said 50 million and under, that's pretty fantastic. Do you have any advice you would give to business owners in terms of preparing their insurance policies for potential sale?
Yeah, we just did a deal. It closed 2 months ago. We were working with the buyer. The seller was very reluctant to bring their insurance broker into the conversation. And when they did, that broker was really not prepared to help the seller get to the closing table when it came to the insurance issues. So we had to step in, which was fine. Now we're an advisor to the buyer, but now we've got a relationship with the seller who's continuing to run that business for the buyer. My advice would be talk to your insurance broker as early as you are talking to your accountant and other advisors, so that they can wrap their arms around what the issues are. And if there's an early draft of a sale and purchase agreement that the insurance broker can review to see if there's exposures that you're guaranteeing that you don't have insurance for, that maybe they can arrange coverage for.
Mm-hmm.
In a recent deal I mentioned to you earlier, the seller had never purchased directors and officers or employment practice liability insurance. Now, they had hundreds of employees, and the buyer was concerned that there could be an old wrongful employment act in the history of that company that could arise after the transaction. And it's not uncommon for that to happen. It wakes up employees to say, I think I was sexually harassed, or I was denied this, or I have this beef with this employer that just sold out, and I'm not going to stand by and let that go. So they file a claim after the transaction date. Now it's the buyer's responsibility to respond to that. And there's unfunded liabilities there. So how are you going to cover that? So what we did with this particular deal is we bought what's known as runoff coverage. Runoff provides insurance for these risks backwards, from the transaction date backwards. So the seller is protected and the buyer is protected, knowing that there's insurance in place for any acts that arose prior to the transaction date. Everybody's happy. Maybe the seller's not as happy because they had to spend a premium dollars on this, but they understood that for this deal to happen, they needed to have that exposure covered. So we were able to arrange that insurance.
That's fantastic. Let's switch gears a little bit and let's talk about some insurance tips and future trends. Are there any insurance tips you would like to offer business owners that, regardless whether or not they're looking to sell their business, but just any general tips in that you may have?
Yeah, so we're heading into what's known as a hard market in the insurance business, and we've probably been here for 4, 5, 6 months. Hard market conditions are characterized by more disciplined underwriters and rising prices. The price component of that is much more evident in catastrophe-prone areas. So any coastal property, anything in the states of Florida, Texas, and California, very difficult right now. And we write insurance across the country. So my first piece of advice would be, regardless of how big your insurance premium is, start your renewal process about 4 months in advance of its expiration. And if you don't have a process, or your insurance broker doesn't have a process, then you should speak to me about what that process looks like. And that's a conversation with your broker. Does it make sense to market our account this year, to go out to the insurance community and get alternate quotes? Or do you think you can secure something solid with who we're with because we like our underwriter, or whatever the case may be? Point number 2, and I talk about this a lot on social and in our content, is understand what your losses are, what your loss history is. That means getting a copy of your loss runs. And I don't care if you're a contractor, a real estate developer, a restaurant, a technology firm, whatever your business is, if you don't know what your claims history looks like over the last 5 years, you should. The reason you should is that if you go out to market to get alternate quotes and you've got 2 or 3 claims, and they could be simple claims, an underwriter is going to look at that and ask, well, what have you done to prevent these claims from occurring again? If you don't have an answer, then you're going to get kind of average pricing. If you've got an answer for every claim that has happened, and sometimes, there's some scary claims in a loss history, especially for a larger company. If you don't have an answer for that question, and you can't say, we identified what the problem is and we've instituted this risk control procedure, you're going to do better than the average. You're going to have a reason why the underwriter is going to price your account better than average, because you've got a thought process, a strategy around reducing risk in your company. The third thing is really focusing on your broker relationship. If your broker is doing a good job for you, you like the broker, you trust them, they have capabilities, meaning they have market representation, they're expert at what they do. Don't go out to market and shotgun your account to 3 or 4 brokers to get quotes. That's the worst thing you can do. I know it sounds counterintuitive. I've probably done a dozen videos on this subject, why focusing on using one broker is the best strategy you can use. If your broker is not capable, if you don't trust them, if you don't like them, if their service sucks, then it's time to find a broker. Find one new broker to work with. Don't try to use 3 brokers to shop the market. It'll end up just being total chaos, and you're not going to get the results you're looking for. Those are my 3 tips.
Awesome. You had those like ready to go, man. I mean,
well, I'll tell you, when you're creating content a lot, you start to formulate, like, what are the real big bullet points in your business that make a difference. And those are the 3 that I've seen continually over the last 25 or 30 years.
And people tend to remember things in threes as well. We tend to do the same thing in my podcast and my presentation. So I love that. Are there any emerging trends or changes in the business insurance landscape that you believe owners should be aware of?
Yeah, I would say that that there are products like cyber insurance that are becoming more and more customizable to prevent, like, there's pre-loss strategies to prevent claims from occurring, and there's post-loss strategies and services that insurance companies offer to help mitigate continued damages as well as contain damages. So, a lot of people think an insurance policy is just a stack of paper, and it used to be that that's all you got, but there's a lot more to it today. a lot of insurance companies do offer risk control services. If you're a large manufacturing or wholesale or blue collar industry type company, your insurance company can partner with you to provide, loss prevention services for free. And if you're not taking advantage of those kinds of things, I think that's foolish. So I would work with your broker to find out if your company does offer those things. If you're a white collar professional services firm, technology, um, whatever kind of other industry on the white collar side there is, I would also talk to your broker about what can our insurance company do help us prevent loss. And if that's on the professional E&O insurance or the cyber insurance, take advantage of those things. It's out there. Why not use it?
Awesome. Now, Gordon, you're no rookie to this, right? You've been doing this for a long time, and you came from a great pedigree with your grandfather and your father. What does the future hold? If you had a crystal ball, like what does the future hold for the insurance industry as it relates to mergers and acquisitions? I know there's been a lot of consolidation in your marketplace. We've seen a lot of that happening, but if you had a crystal ball, what do you think the future looks like for insurance?
I think we're going to see continued consolidation in the market on the broker side of it.
Mhm.
Over the last 30 years, we've seen massive consolidation in the number of insurance companies that have existed. Now, there's been a lot of small insurance companies pop up, and they may provide specialty coverages. But the number of A+ rated companies has shrunk dramatically over the last 30 years. The
Mhm.
number of insurance brokers has shrunk because of this consolidation. There's a lot of money rolling around in our industry, private equity funded roll-ups that are buying up agencies right and left, offering them tremendous multiples. So I can't fault any of my peers that have sold out. But what has happened that we've seen in just large quantities are dissatisfied clients. Especially smaller and medium-sized clients that are paying premiums of $10,000 to $75,000. And these large roll-ups don't have the capacity to deliver the relationship, the expertise, and the service, basic policy services to these clients. And they're leaving those big books of business and they're migrating back to smaller brokers like me who offer that personal service. I think we'll continue to see this kind of disruption in the marketplace on the broker side, where you're going to get bigger brokers. And it's going to provide an opportunity for smaller brokers to enter into the business. Maybe a producer, a salesperson that works at an agency today says, I see an opportunity here. I'm going to open up my own shop. And there's a lot of ways you can do that. And there's a lot of clients that are really not happy with the big brokers and their lack of relationship they have.
You mentioned something earlier about liking your broker. I believe if you have that relationship and that connection, and that broker is providing a service and has been great to you over the years, like for me, it's like I will go back. I'm very loyal to my vendors and my service providers. If I'm getting a great service, I don't care what's happening around. I'm going to come back to you because you've been good by me over the years. So, especially in the space that I'm in, a lot of spaces are becoming commoditized, and if you provide service, you go over beyond. I mean, your clients are going to stick with you. So, I have to ask you. I don't want to put you in a spot, but I have to ask you a question. So, is there a fourth generation in the work? What's the succession plan there, Gordon?
The succession plan is for me to sell. I'm 62. I think I've got several more years. I'm not going to put a number on it. But I've got several more years that I want to work because, like I said, I really enjoy what I do. The business is growing. Last year, we did about 36% year-over-year growth.
Nice.
That's very exciting. And we've seen that year over year. So I feel good. I'm energized. I love what I do. I don't see a reason to retire. My kids, I have 2 kids. They both have very good jobs, very rewarding careers. One is a teacher, one's an executive at JP Morgan. So there's really no interest to come into the business. And I'm grateful for that, because then when it's time for me to retire, I'll do my earnout period and then I'm done. I don't need to support that legacy. And yeah, it would be great to have a 4th generation, but it's okay not to have it too.
Well, I mean, you have been carrying that torch and blazing away and doing an awesome job for your clients and being a good father to your kids. And one thing I tell my clients is that, the legacy doesn't necessarily stop because you exit or sell your business, right? You're going to use that as a opportunity to leverage and create additional legacies, right? So we're not just put in a specific box, hey, this is what I do. I just do business insurance. You've created a career and a legacy in that, but there's a lot of other great things that you can do, and the skills and the value that you bring to the world, people deserve to have that. So, I really appreciate you, joining today in our podcast.
It's
I
been
want to
great
give you
being here. I
opportunity to,
appreciate you inviting me.
yeah,
Thank you.
yeah, definitely. And I want to give you opportunity to plug your podcast. Go, I had a lot of fun. And trust me, I prefer to be interviewed than to interview. I'm just being transparent here, because it's people think it's challenging. I love what I do, and I love talking to cool people like yourself. But when I was on your podcast, I just felt at home. I could just kick my shoes off, and the here I used to have, I could have let it down and just relax and and have fun. But any takeaways from our segment today, and maybe you can share a little bit about your podcast, any projects you have coming up, if you want
Sure.
to share, it'd be great.
Sure. So, my takeaway is that, like, everybody in business development, regardless of the industry, I think that the number one thing that you should be doing is putting yourself out there, broadening your network, getting people to know who you are, what you do, and why you do it. So social, podcasts, interviews, streaming, all of these things are just phenomenal ways to build your personal brand and to expose yourself to what could be potential clients. I don't know if the phone is going to ring tomorrow or later today. Hey, I saw you on Kyle's, streaming live thing. I'd like to talk to you about my business insurance.
We're going to manifest that. Your phone is going to ring at the end of the day today, or you're going to get some inbox. You're going to get that.
Well, that may happen.
Yeah.
But what's more likely going to happen is 2 weeks from now, I'll be at a meeting or I'll be having drinks with friends, and somebody will say, "Oh, I saw you on Kyle's live pod. That was so cool. How did you get that?" And it's a conversation starter, and it's top of mind awareness. These are all things that business development professionals need to be aware of, but they shy away from them. So, my quick takeaway is, if you've never thought about doing what Kyle's doing here, or hosting a podcast like I do, my podcast is called the New York Business Leaders Podcast. But at this point, if you're not in New York, that's okay. If you're a business leader, if you're a thought leader, and you want to put your brand out, contact me and we'll talk about getting you on the show. These are all assets that can be used and reused and redeployed to build your personal brand, which is so important today. There are a million insurance brokers. There's a million guys out there that are deal makers. What separates Kyle from other deal makers? What separates Gordon from other insurance brokers? It's their personality. And this is what is delivered in these forums and in these platforms. So I love the idea. So I'll get off the soapbox now, but I think that that's really my takeaway, is that for anybody in biz dev, if you're not using social, if you're not using video, I think you're missing the boat, because you're not building your own brand.
Yeah, I couldn't agree 100%. It's a good opportunity to connect, and you're right. Most folks may not reach out right away, but you're making a digital imprint, and at some point, it creates a talking point opportunity to have a discussion down the road, and
Right.
it just shows your personality. You can't chat GPT this, right? You know what I mean? This is a real
100%.
This is a real live. I love doing it live. So I'll share. I'm just being fully transparent. I'm gonna share some with you. So for some reason, I feel the live events kind of is more impactful, because when you are doing a pre-recorded event, you feel, you're not 100% in the moment, because if you make a mistake, it can be edited, right? You can, if you mess up, hey, I'm just gonna take that out. So when you're going
It's like,
into it, yeah, that mentality is like, hey, I have 2, 3, 4, 5 chances of getting this done. But in a live event, hey, you're on, and this is out in the ether, and you're just being real. If you mess up, hey, you mess up. If some words come out that not FTC approved, hey, it's live, right? But that's why you call this off the record, right? This is completely off the record, except it's on the record. But so how can folks get a hold of you?
Sure. So you can catch me on LinkedIn. Just search for Gordon Coyle. You can Email me. My email address is gb, as in boy, Coyle, Coyle, at thecoilegroup.com. You can visit my website, coilegroup.com. Catch me on YouTube. Catch me on Instagram. Just look for GB Coyle a lot of the time. On YouTube, it's the Coyle Group. Just search Coyle Group, the Coyle Group, and I think you'll find me pretty easily. We've got about 350, 60 videos up, and we're currently doing a good job on shorts. So we're going to make a foray into TikTok. Not there yet, but we'll experiment with that soon.
You got some dancing skills, Gordon? Am I going to see you?
No, none of that nonsense.
TikTok is like its own phenomenon. I have not really explored that yet. I'm just a one-trick
I think there's
pony right
massive
now.
opportunity there.
Yeah, we're going to get out there at some point, but I appreciate you, and you inspired me to get back on live camera as opposed to hiding behind the camera on audio, and appreciate you joining. What we would do, we would share the show notes with Jordan Coyle's information. I get a hold of him. I also share the interview that Gordon did with me maybe 2 months ago. It's on my LinkedIn profile. I want to thank everyone. I appreciate you guys for joining us. You have been tuned into the Kyle Sells Biz, Off the Record with Kyle Sells Biz, where we bring on experts like Gordon on different aspects of business growth, expansion, and exits. And I see my good friend Jack Cox. He says that I agree. I think live is more engaging for the audience as well. Thanks, Kyle. So thank you, Jack, for your feedback. And this is recorded, so we might get some comments. Folks that are either on the West Coast that are now getting up may tune a little bit later. So expect a phone call, Gordon. We're going to manifest that. But thank you, my
Kyle.
friend.
Appreciate it.
Always a pleasure. And I think we have a date in a few weeks, so I'll see you then.
Very good.
Take care.
See you.